the big point here is that for almost all the markets in the United States, a peak apartment construction has already happened. We're well off of it for many of them. The apartment market has definitely cooled, and there's like a lot of variation to not only like rent growth patterns, but apartment construction patterns. And RealPage really lays this out effectively in the article. Now, I think at first glance, so they have listed here in a chart the total quarters lapsed since the multifamily construction peak, and the top markets, which are at their peak right now for construction, are Detroit, Indianapolis, Miami, New York, Newark, and San Diego. This is in terms of number of units, by the way. And then some of these markets where there are 7 quarters removed in the past, way in the past, their peak are places like Chicago, Boston, LA, San Francisco.
These markets aren't building as much anymore.
Yeah, exactly. They're the ones that aren't building as much. And so at first glance, it seems kind of like the markets that are currently enjoying higher rent growth are the ones where peak construction activity is happening. I think Chicago is a big outlier under that logic since it has seen robust rent growth recently, but it is very far past its peak for apartment construction. It has the third biggest gap.
It's I'm trying to find like the big like relations, because it's not like all the Midwest is in one category.
Yeah.
And it's, I mean, the second quarter of 23, 1 quarter removed. I mean, Detroit, Indy, Miami, New York, Newark, San Diego. I mean, I'm trying to connect all those dots.
Yeah. So it does seem a little bit like the Midwest is getting the construction trend a little bit later than the Sun Belt.
That's true.
But with an important caveat is that for these Midwestern markets of Detroit and Indianapolis, which are the 6 markets that are at their peak right now, for these markets, Detroit as a percentage of units, as a percentage of current supply, Detroit's under construction units is 3%, and that's their peak right now.
Yeah.
Phoenix, which is way past its peak, 9.3 currently under construction as a percentage of supply. Phoenix, their peak was way higher and way stronger than ours. Is like Phoenix would love to have. I mean, for an investor in Phoenix would love to have that. Indianapolis is at 4.6% of construction as a percentage of supply. Cincinnati, which is far past its peak construction, has 3.8%. So not a huge difference for among the Midwestern ones, which are around the 3s and 4%. But man, it doesn't say much if you're past your peak when you're still at 9.3% of.
You're still building a lot.
Yeah. So that being said, it's hard to argue against the fact, though, that just as greater supply affects demand and that higher performing markets, I think higher performing markets are going to incentivize the apartment developer players in the region to start a project there. Yeah. This is, look at how well these.
Well, and there's a little bit of a lag too.
Yeah.
Because it's like, okay, you see Indianapolis just crush it this year.
Mm-hmm.
And we're getting now developers start paying attention.
Yeah.
Investors start paying attention. And, they're getting back to technical analysis, the trend can be your friend, and, there's a positive trend in that direction.
Yeah.
Maybe you'll see continued growth, but you also can be too late to the game.
Yeah. I think that the lateness of the crest is reflected in its, whatever we had, maybe we missed the boat when it was trendy to have a lot of construction, and it's really there. I think it's a fraction of the fundamental stability of Midwestern markets just aren't as swingy.
Yeah, well, it's true
as some of the other ones.
No, I think that's a good point, and I think that there's probably a little bit of demand for something. There's probably some thirst quenching component of a less volatile market of just give me some steady eddies, good returns. I don't have to worry about it.
Yeah.
It's got to be an appeal there, especially to some, buyers who have been dealing, maybe in the Phoenix market, Austin market, Texas, Florida, those just highly competitive markets, which have been great, probably will be over the next decade, but it's hard to get into and make sense of. Well, Matt, thanks for thanks for making sure we get that piece
problem.
Because great piece from RealPage's Carl Whitaker, a friend of the show.
Yeah.